What's up, guys? Welcome to the weekly Technicals Live session for February 24th, 2019, and we are currently looking at the economic calendar for this upcoming week. And for Sunday, we don't really have too much. We just have some New Zealand dollar medium impact and high impact news that'll be releasing at 1:45 p.m. Pacific. And then for Monday, we've got British pound during London session at 2 a.m. Pacific. And then we've got a FOMC speaker at 8 a.m. So for New York session Monday. And then Tuesday we've got some more dollar index news, high impact for New York session. So Tuesday New York session will definitely, London and New York session will be a focus for Tuesday as usual. Then going into Wednesday we have some more dollar index news for New York session as well. Thursday, same thing, dollar index, high impact for New York session. And we also actually have a late speaker for dollar index on Thursday. So we could get a potential Asia session set up there. And then for Friday, we do have more dollar index for New York session. So overall for the upcoming news events for this week, looks pretty solid. We have a good bit of dollar index news, so that definitely means there'll be some volatility within the dollar, and that should definitely cause foreign currency and all of the majors to get some movement behind them as well. So I'll be focused on Tuesday, Wednesday, Thursday, London and New York session, probably primarily New York session this week since we do have a lot of New York session news releases. So that will be my primary focus, and again the pair I'll be focusing on will be euro dollar. Still not really focusing on British pound right now because it's still unclear to me, and well, not really as unclear as it was since we are back above our level, but we'll talk about that in just a second. So with that being said, let's go ahead, we'll close down the economic calendar and we'll jump into the charts. So looking at dollar index, we can go out to a weekly time frame. And in terms of a weekly perspective, above us we have the equal highs here at 97.70. That's where our buy side liquidity will be, and our sell side liquidity will be resting below this low at 95.20. Now on a weekly basis, you guys can see that last week we had a relatively bearish week, so we're just coming back down and retesting weekly support. So we'll see if we can get a potential rally from where we're at. But on the daily for dollar index here, if you look at this chart, we've broken above this high here. Now we're still stuck within this candle here. So kind of the idea that I'm thinking is if they come all the way down here, they'll likely want to retest 96 big figure as support. But I would ideally look for dollar index to find some level of support between where they're at now, so 96.50 down to 96 big figure. Now, if we just keep selling off and we close, aggressively below 96 big figure, then we'll probably want to run the sell side liquidity at 95.20 and then down here at 94.80. And then we also have our equal lows back here. So I don't necessarily think that's the case as of right now. I think we do have higher prices coming up for dollar index, which should cause weakness on foreign currency. But like I said, if we do get some type of aggressive sell-off on dollar index, then we'll have to be switching our underlying bias on foreign currency. Now something that I am looking at is a lot of people are probably looking at this as a topping formation, and it could definitely be a top, but I'm not looking at it to be a long-term top, for example. So this can be a short-term swing high. The market could come all the way down to 96 big figure, find support, and then aggressively start trading higher above this high. So I'm just looking for this high to be in place until we actually trade lower into our 96 big figure support. And once that happens, this will be a target. So I'm not necessarily thinking this is a long-term lower high point or anything like that, but I'm definitely looking for it to be in the marketplace for a bit, at least until we get some type of a solid retracement here on the daily down to either where we're at now, where we can start rallying from here, or do they need to come back down to 96 big figure before finding support and ultimately wanting to take this thing higher. So a few things I'll be watching out for this week, and you guys should also keep an eye out. When the market does get down to 96 big figure on an hourly time frame, you're going to want to be looking for the market to find and show signs of finding support there. So the market could trade into it, with one hourly candle, then the next hourly candle could be like a big bullish candle, for example. So say we're trading down, we trade right into this, right? We got our black bearish candle, and then say we find support, and then we just aggressively turn around and start trading higher. So I'll look for this type of movement here. Once the market does get some expansion away from the level, I'll look for them to retrace back down into previous support, and at that point I'll buy the market. So I'm not necessarily going to buy it as soon as it hits 96 big figure, but I'm going to wait for it to have a reaction off of that level, and typically that you'll be able to see that on an hourly time frame or lower. And based off of that price action, then I'll get myself positioned in a buy for dollar index. So just to sum things up, guys, for the week, main target for me is 97.70. I'm still looking for a bullish dollar. Now we may need to trade down to 96 big figure first, but ultimately longer term I do want to see 97.70 on dollar index. Now if something changes throughout the week, of course I'll update you guys in the premium group between Tuesday and Thursday in our daily technical sessions. But as of right now, I am still bullish dollar index, and I'm looking for those higher prices. We did get a beautiful scenario though from our previous week's technicals. So last week we mentioned that we wanted to see the liquidity taken out below these lows, and then we also had liquidity taken resting below these lows. So last week when we did the weekly technicals, I said I want to see them expand down to those levels, typically early on during the week. Now what they did was they did come down early on the week, but they just consolidated in between those levels going into Friday's close. So you can see that perfect example here. But ultimately the key thing to take away is we have cleared the liquidity that we were searching for last week. So now that we've pretty much achieved our downside objective in terms of a intraday basis, I would personally be looking for higher prices. There isn't much reason that they would have to go lower, but we do have the daily level at 96 big figure, so that could definitely be enough for them to take it lower. But as of right now, I definitely want to see whether or not we can start trading higher and potentially get above that 97.70 level by the end of the week. Now if we do continue just having like an aggressive sell-off below 96 big figure, for example, this 95.20 low will definitely be our target for the sell side. So if something happens and we do need to switch our bias, then this will be our target, 95.20, just so you guys kind of know ahead of time what I'll be planning to do. But as of right now, like I said, I'm still bullish dollar index until that it proves to me otherwise. But let's go ahead, we'll drop back out to a daily and we'll move on to euro dollar. Alright, so euro dollar, very similar. We pushed up, we've broken above this daily high here, cleared out our daily liquidity, and we've just been kind of wicking in that area. And notice the bodies of the candles though, we're closing below there. So basically this is still indicating some weakness to me, and if dollar index can get that that push higher, then I'll be looking for this to sell off. And first target for this will be the liquidity below here at 1.1260, and then we have this 1.1220 level down here, which is our daily liquidity as well. So those will be my targets on the downside. Now we do need to see some sell off, like some type of significant sell off. We don't want to just see the market kind of pausing at this level, because it could very well be retesting daily support and start trading higher. But as of right now, even if you come down to like an hourly time frame, for example, the markets have been pretty choppy, especially for this pair. We've been in a pretty tight consolidation. But the thing is, if we can start breaking aggressively lower and we get below this low here at like 1280, then it should be a smooth ride down to 1260 and even 1220 as well. But the first things first is we really need to see them break below this low, right? Because ultimately, as long as they're within this, the bodies of these candles, then they can very well just continue consolidating within here. But that's why I'm looking for this low, because if you notice, it was a pretty significant run down to clear out any sell side liquidity, and then we aggressively started trading higher. So there's going to be a lot of orders and stop losses built up below this low. So if the market can trade below that and we close below that level, I'll be looking for a potential continuation lower. And, for example, if I can get on at 1270, I'll write it down to 1220, and that'll be 50 pips. So that will be, kind of how I am outlining and like framing the trade. But overall, from this daily perspective here, we want to see the market ideally stay below this high here on February 20th. So the high comes in at 1370, and ideally, like I said, we want to see the market remain below that level, which should indicate further prices to the downside. Now, if we go back to an hourly chart, last week we were mentioning that we wanted to see a run above this 1.1340 level, which was the buy side liquidity. And you guys can clearly see that we did get a nice, beautiful expansion above that level. So this one move basically took us above both of our levels. And like I said, we just kind of consolidated around there for the remainder of the week. Same thing for dollar index once our levels got hit. Most importantly, though, our levels did get hit from previous week. And, what we outlined did, in fact, kind of come to fruition. But the markets didn't really have any follow through or continuation after the fact. All right, so let's move on to British pound now. And this one, like I said, I'm not, analyzing it in terms of trading it right now. I'm just mainly analyzing it for kind of learning purposes and seeing whether or not the market does kind of follow, the suit that I'm expecting it to, or I guess kind of follow the format that I'm expecting the market to unfold. And, this one's definitely been tricky. So I don't want you guys to think that, this is a pair that you should be focused on and trading right now, because it definitely is tricky right now. We're still overall in this, longer term choppy consolidation here. But what I want you guys to kind of take in is we had this, explosive move back above 1.13 big figure, right? And then we came back down Friday, basically, provided an opportunity to go long for anyone that was deciding to, buy this currency, and had a nice little pop up here. So the key thing to realize, though, is we've closed above the 1.13 big figure level, the 1.30 big figure level. I'm sorry. So if you look at it on a weekly basis, we've got a swing low in place, right? This candle has now closed above this candle. So we've got a new higher low in place. So the next thing this market should do logically would be making a higher high above at least the 3220 level, right? So if we come back down to a daily, you guys can see 3220, this high, right? I'm not adding a line there because then it's just going to be too cluttered with all my other levels. But ultimately, if they get above 1320, they should take it above 1.32. If they get above 32 big figure, they should take it above 1.3250. So that's just kind of my objective. So I don't really need to have 3220 on here, because I'm expecting them, regardless, if they get up here, to go for 3250 as well, and potentially even 33 big figure. These highs are just too close, in my opinion, for them not to just clear them all out. So that's why I think when GBP USD starts rallying, it's going to be a big explosive move to the upside. But like I said, the key thing to remember is we are back above 1.30 big figure. So that is indicating further bullishness for this pair. When they were trading down here, obviously we didn't know whether or not they were going to continue lower, or were they going to start going higher. So I said, let's wait for them to get back above 1.30 big figure. If they do that, obviously we can look for higher prices. Now, Monday and Tuesday's trading is going to be really important to me for this pair. If we can start breaking higher and we get above 1.3110, then, and we have like a pretty strong bullish candle, at that point I will more than likely be a lot more confident in taking a position on this particular pair. So even though I said I want to see it get back above 1.30, I really need to see some indication of strength before just hopping in. So breaking above this short-term swing high would definitely indicate strength for me, and at that point I would feel a lot more confident in getting positioned in a buy. But as of right now, I don't want to get myself positioned Now, if you guys are swing traders and you want to take a long, right here where we're at, your stop does have to go back below 1.28, and your take profit could be at 1.33 big figure. So relatively risking about, roughly 150 pips for 300 pip reward. Let me make sure I'm right. Oh no, sorry, 250 pips for 300 pips. So about 1-to-1 in terms of risk to reward. So if you guys are swing traders, you can participate in that. But I would definitely recommend using or making sure that you use proper risk management, obviously, because you'll have a 300 pip stop loss. So you need to make sure that's relative to the account that you're trading. So I'm not particularly a swing trader, so I primarily focus on like intraday or day trades. That's why for me, if we get above 1.3110 and say that happens on a Tuesday, then I'll be looking for a continuation up into 32s, which will be about 90 pips minimum for the following day. So if we get above here on Tuesday, then Wednesday I'll look for a continuation up into that 32 level. And that's pretty much how my trading model works. I need to have like a confirmation of the daily level, and then I'm forecasting whether the next day is going to be bullish or bearish, and then based off that I'll look for my setup and the charts. But that's how I'll play this one specifically. So if we come down to the hourly, really you guys can see that we were consolidating pretty much how dollar index and euro dollar was. And right here on Friday session, Friday during London session, we dropped lower, cleared out the sell side liquidity, nice little sell off, got right to our 1.30 big figure, and dipped into it a bit, and ultimately we broke all the way back up. So what you guys need to realize is we've now broken what? Market structure, right? We've broken market structure here on an hourly basis. All right, so the market was making high, low, lower high, lower low. We should have came back up and formed a lower high, but the market decided to come all the way back up and make a higher high. So now we've broken market structure on an hourly basis, right? We've already got our daily break in market structure, which is here. Then the market's dipped into our level, broken market structure on an hourly time frame. So realistically, we should not see this market come back below Friday's low. So Friday's low is 29.68. So we can just put a red line on 29.70, which is 2 pips above the level, but just to even it out and be a little early. So all right, red line will basically represent when we need to potentially switch our idea or look for a deeper retracement, and blue line is basically support. So we want to see, which comes in perfectly at the 1.3050 level. So mid figure in between 1.31 and 1.30. So key thing to remember, guys, all of pretty much significant swing highs and lows form, and a lot of orders are built up around the big and mid figure levels, such as 1.30, 1.3050, 1.31, 3150, etc. So obviously, you guys can clearly see that if we go back out on a daily, notice the significant swing highs: 32, 3250, 33 big figure, right? What is this low? 28, right? All relatively close to big figure levels. So just take that in. This is a very common pair to work and operate around those big and mid figure levels. So we could definitely see 1.3050 provide some level of support and see the market start rallying up from here. So like I said, though, I want to wait for the market to get above 1.3110, because at that point we will have a kind of proof that this market is wanting to go higher. So while we have the break in market structure, we've got the retest here. Further continuation to the upside will just prove that this market is strong. So it is valid for a buy. So even if you did want to get on a swing trade and have your stop kind of close here at 29.70, that would be realistic. I would say even targeting 32 big figure, so that's like 150 pips for like 80 pips risk. So pretty solid setup. But like I said, I just need to, like, personally for me in my trading plan, I need to have more confidence and conviction behind the trade. So if we get above 31.10, then I'll have a lot more conviction behind it. So while this still looks good and it's still like my ideal trading pattern, this pair has been a little out of whack. So I'm primarily focused on euro dollar, but it's really going to depend on, you know, kind of how this week is playing out for cable, determining on whether or not I'll get positioned in this pair myself. So that's it for that. Let's go to Euro GBP now, and then we will wrap up the session for the day. All right, so Euro GBP obviously has been selling off, targeting our sell side liquidity here that is at 86.20 we've been mentioning. And notice how the market, you know, kind of came close to our 50% level. So we've got the high of the range, the low of the range, and then the 50% level marked out. And you guys can see that the market came pretty close to the 50% level, but ultimately couldn't find any strength to get above that level, right? So we kind of stopped and we started selling off, and then look what we've done here. Made a new lower low, broken below this low, old support right here. Market came back up on Friday all the way to the level, retested it as what? Resistance, and then the market closed below it. So look at this low. The low comes in at 87.28. This high on Friday comes in at 87.28. Perfect to the pip. So this is exactly what you would expect and want to see from a bearish market. And obviously we want to be looking for lower prices on this. So 86.20 will be our next downside objective. And that is in line with our potential rally on British pound and also our potential sell-off on euro. So typically, you know, we would look for these pairs to be in sync, meaning if euro is trading higher, we want to see GBP trading higher as well. And typically that's how the markets will move when they're all in sync. But for example, if euro GBP really, you know, is super weak and we start getting a lot of kind of momentum and we're breaking lower, getting out of this consolidation that we've been trapped in for a while, and we get below 86.20, this thing will kind of be open, you know, from 86.20 to 83 big figure to just kind of, you know, free fall. And if that's happening, that's going to cause, number one, a lot of strength for British pound, and number two, a lot of weakness for euro. So while this thing is in consolidation, both of those pairs, euro USD and GBP USD, can kind of move on their own. But when this thing is, you know, trending in like a significant bearish or bullish trend on a daily basis, for example, we can see a lot of volatility come in those two pairs. So keep in mind of that. But like I said, I do want to see, you know, can we break below 86.20? Once we get down below that, you know, it will kind of be based on how price action acts around that level. Like, are we wicking around the level? Are we, you know, breaking through it with big bearish candles? If that's the case, then we're going to look for lower prices. But if we're just kind of wicking through it, then we may find support and, you know, kind of consolidate back and forth in this range that we've been in for a while. So, and if that happens, dollar index, you know, depending on whether or not it's going higher or lower, is going to be a heavy factor whether or not what euro and British pound do. So that is pretty much it for today, guys. I'm going to go ahead and wrap up the recording. And Antoine and Anthony, if you guys have any questions, I'll hang out for a bit and you guys can ask me any questions you have.